Alrighty guys, welcome to a new video, and in today's one I thought I'd do a little bit of a trade breakdown into this short that I took during the Asian session. If you're new here, my name is Ruben and I pretty much trade ICT concepts. I have been for the last 2.5 years. Mainly I focus on macros, but I also like macros paired with market structure. With that being said, let's get straight into this video. And like always guys, if you have any questions, leave them down below. And if you haven't yet joined my free Discord community, feel free to do that. The link to that will be in the description below. Let's get into it. Now, as you can see guys, at the moment I am on the 1 minute chart. But for me, the big narrative builder, the way I build a narrative, the way I figure out or I anticipate where the market will move, more likely or most likely, is using the higher time frame charts. And I'm not talking about the 1 hour chart. I'm not talking about going from the daily and then moving down to the 1 hour. I don't do that. I simply need to look at where the market is and ask myself, is the market in a position where it has reacted in the past? So what you can see is this: at market open, price, accumulated pre-open. At open, we pushed up, right? So as price is pushing up like this, I'm asking myself, well, where can price trade towards? And for me, the closest draw was obviously this 15-minute fair value gap, which we're engaging at the moment, or we just tapped into right here. Now, this is the basis of the trade, but there's more to that than this, because as you guys know, in a market, if we're bullish or bearish, the market can't always do this, and it can't always do this. There needs to be some kind of pullback. And even in a bearish market, right? So say for example, we look at previous price structure, you can see prices sold off like this. We can't just keep going down forever. And this is what kind of allows me to phrase this trade. We have to have some kind of pullback if we're going to move down. And the key word there, guys, is if. I'm not trying to predict the market. I'm not trying to say that the market's going to spool all the way down. All I'm trying to do is put myself in a high chance position to take a quality trade. I couldn't care less if price went down from here or if price pushed up, because my trade's been taken. And that's the framework or the basis that I like to use: premium discount, but more so looking for areas where the market finds support and resistance. So the first step, obviously 15-minute chart, we identified this. And just so you guys can see, right, on the screen here, I'll get up my premium Discord, my live analysis section. For those that are curious, I have a live analysis section that I post for the Asian session. Then about 3 times a week, we hop on a call live for Zoom for the London session. And here's my call out today at 9:50 Australian time. And I pretty much mentioned that, I want to see price tap into this 15-minute fair value gap. And if and when it does that, then this could be a reactionary point back down. And then here's that trade that I just mentioned. You can see we got that here. So it's not very complex when you think about it. All I'm using are fair value gaps as support and resistance areas, and then combining that with an overall narrative. Here's the thing: you can't just use any fair value gap and think that the price is going to have a reaction. You can't try to predict. You need to have these anticipations, but then wait for the reaction that makes sense. So again, start with a 15-minute chart. We then drop down onto the 1 minute chart like this. And a lot of people say, well, what about this? What about this move up here? Well, there's plenty of opportunity here. If you want to trade the opening range, you can. You can trade these fair value gaps as price pushes up. Some people, that's their model. For me, it's not. So if that's you, yes, plenty of opportunity up here. Even some nice longs potentially from right here leading into that macro. But if you miss that, like myself, if you miss this long, if you miss the trade up into the PD array, then you can always take the trade away from the PD array. And this is what people don't realize. There's 2 trades to take, right? If we go back just for a quick sec onto the 15-minute chart, there's 2 trades to take. You can look for longs into the fair value gap. People trade that way. Or you can wait for price to engage the area and then trade away from it. And both are okay, both are good. Not one is better than another. Just because one, might run more than the other doesn't mean it's better. You can take both, right? And I do both all the time. Just depends when I'm trading, when I'm looking for a setup. So we start with that, right? As soon as price taps into this gap, as soon as price taps into this, look, boom. When price taps into this fair value gap, my eyes are now on the price. I know that price now can reverse. It's just something we've seen repeat. We know this, right? If you're new to my channel, check out all my other videos that are posted for free. There's plenty of information there about this framework. Now, all I'm waiting for is my entry criteria. And there's so many ways to enter, right? So in this price structure here, there's so many different PD arrays. But for me, I'm mainly focused on inversion fair value gaps. Does that make sense? But yes, of course, these down close candles here, right? When price breaks down below those, that's a breaker. And yes, we do trade back into that here, and you could have gone short here. That also works out, right? But for me, I'm using the inverse fair value gap, and there's a few things that come together here that make it really nice. Firstly, get your eyes down here. That, which has now been swept, is all smooth sell side. And ICT, if you haven't watched his videos or watch mine, it's all about targeting smooth sell side, smooth buy side. You can see these are all relative equal lows. So many, 1, 2, 3, 4, 5. It's a good target. You can also see that price has come up, and I'm just going to draw this out here for you guys. We've come up and we've swept buy side. I'm going to mark that out in blue, right? So we've swept buy side liquidity. After sweeping liquidity, what have we done? Swept more buy side and swept more buy side. But the important part, here's the important part. We sweep buy side and it's inside that 15-minute gap. We accumulate, we store, we start to push down. And then the impulse gives it away. The impulse on this inversion, for me, that's what gives it away, guys. And this is what a lot of people don't understand. You have to have impulse when you're taking trades. You can't just take any random inversion. You can't just take any random pullback. Any pullback is going to get you wrecked in the market. Please, please, please keep that in mind. So I see that sweeper buy side. I see this inversion that is formed with some nice displacement. I'm always looking for displacement and I'm looking for impulse. And I didn't enter right on this candle. I waited for a little bit more. I waited for this candle. I could have waited for the close. I could have waited for, a change in the state of delivery below this candle here. A lot of people would do that. And that's still valid. That's still valid. Going for a short like this, still a valid trade. Place your stop above these bodies at the high, whatever you need to be. And then you can target these lows. Or take your 10 handles, take your 1-to-1, which is what I did, and then call it a day. So my entry came roughly from about here. I took around 10 handles in the trade. My stop was at the top of these bodies. 2 contracts in, 2 contracts out, no partials, 1 and done, and very easy to start the week, right? So these types of setups, guys, these apply time and time again. You're going to see this in the Asian session. You're going to see this in the London session. You're going to see this across the whole day. What we have to do, what you guys have to do, what I strive to do, is to look for these repeatable patterns in the market. It's not about picking perfection. It's not about determining, when exactly it's going to turn. You just need a rough idea. And this is how easy it is to build a narrative, to build a bias. I don't need to know where the price is going to go in the next 2 hours. I don't care because my trade's been taken. All we need to care about is where should price go in the next 30 minutes or where should price go in terms of likelihood based on the trade we're trying to take. If you want to check out my Twitter, I'm posting there pretty much every single day. Go and follow me there. And if you want to join the free community, the link to that will be in the description below. Plenty information here, plenty free education, charting study. We've got PDFs here for you guys. But that's what it's all about. It's about learning, it's about applying this knowledge, and it's about being consistent with it, guys. You have to be consistent on. Yes, it's fine to have some time off. Yes, it's fine to reflect, but you need to be consistent with your application, and that's going to give you confidence when approaching these markets. With that being said, guys, I hope you have a great day, a great week. Start the week strong, and we'll talk very soon. If you like these trade recaps, let me know below, and we'll talk very soon, guys. Peace out.